exactly right. And what assets are you looking at today that you can prosper in the future from a crash?
Yeah, and I've always said that if Bitcoin goes down to $2, I'm going to load up. Do I give a crap? No.
And if Bitcoin is at, I don't know what it is at today, let's say 50,000 something. 56. Well, if it's going to go to $500,000 to $1 million, I don't really care if I buy it at 50,000 because I think we'll have a nice profit there. So I'm not too concerned about, you can never find a bottom. And if you're waiting for the bottom, you're going to wait forever. And I think that's a silly, if you want the price to go down, but people go, I'm going to buy at the bottom. We never know when the bottom is.
And this is the other part about it is, I say gold, silver, Bitcoin. Well, try buying gold and silver. It's gone. There's nothing in the stores. It's like ammunition. You can't buy ammunition. So I tell you what, ladies and gentlemen, these are not ordinary times. And Harry's very big on treasuries, which I really don't, because I've never owned them. I don't like them. I don't trust the Fed. I don't trust the Treasury.
You certainly can't control them.
No. So it's all manipulated.
Yep.
And so that's why, ladies and gentlemen, Rich Dad is a financial education company. And education doesn't mean you have to agree with us. You don't have to agree with Harry, but you better find the way that works for you. So I want to thank you for listening to the Rich Dad radio program. Sarah, final comments.
Just another great show with Harry. I wrote down all of his predictions. Dow to 5,000. Bitcoin's going to be 90% off. Treasury bonds are going to go higher. So we have a lot to do over the next 2 years because he was predicting a lot. But I love having Harry on because although we disagree, it's the other side of the coin. And that's what we're here to do, is present the other side of the coin.
Well, he's in different asset classes. He's not a real estate guy. Understand, if you guys can understand that. And Kim and I live in Phoenix, Arizona, because we came for the crash. And we backed up the truck. Kenny McElroy, we just backed up the truck in 2008. We borrowed like $300 million, something. I forget how much we borrowed anymore. But we used debt as money. And so Harry uses cash. We use debt. So if you can hear the differences in our arguments, you'll be smarter. So Kim and I love debt. Harry likes cash. Why would I like cash when I can use debt to buy real estate? That's the difference, okay? So thank you all for listening to the Rich Dad Radio Show. Thank you to our friend Harry Dent. And you always know where Harry's at because he'll tell you why he's right and you're all idiots. Thank you, Harry Dent. Bye-bye. And and for those of you tuning in, if you hate Trump and you like Bitcoin, you'll probably hate me after this. But anyway, I'm going to tell you what I know. I don't want to swing either way. It's like I said, there's a lot of fake news out there. So I love Bitcoin. I almost bought it, I think it was 2017 when I was at 20,000. But I didn't. And I'm going to say this much here. Okay? This is real financial education, what they don't teach you at school. So there's 3 kinds of people in the world when it comes to money. There's an investor, a trader, and a speculator. I am an investor. So the moment I started buying Bitcoin, I wasn't a trader. A trader is somebody who's going to buy it and sell it. A trader, like in real estate, is kind of a flipper. They buy a house to flip it. That's what traders do. And a speculator is a gambler. And I would say most people who are chasing Dogecoins and all this other stuff and Bitcoin, they're speculators. They're all kind of gamblers, hoping it'll go up. That's not what I do. Because we all have a different point of view on it. So anyway, I want to thank you for listening to the Rich Dad Radio Show. You can listen to it anytime, anywhere on iTunes, Android, and YouTube. And please leave a comment whenever you want to. All of our programs are archived at richdadradio.com. We archive them because we're only an educational show. We don't make recommendations. We don't say what to buy or sell or what to invest in. But most important, have your friends, family, and business associates listen to it because that's how you'll learn. When you review the show, you'll learn a lot more, discuss it. And just know that in the world of money, there's millions of ways you can get rich. And there's billions of ways you can get poor. So that's why you listen to the Rich Dad Radio Show. And again, really thank you for Harry did. It's always entertaining traveling with him because we don't agree.
Well, you agree on a lot of things.
I know.
But I love Harry because Harry has another point of view, and it's a point of view that I want to pay attention to, and I'm going to look at 2022 and the Treasury bonds, and I'm going to look at what's happening in June and July, and is this crash happening at that point?
I hope it does happen.
And in reading too, I mean, one thing you guys do agree on too, because when you both were calling for crashes, you both said you never anticipated they would be printing so much money to keep it propped up. So had that not happened, this crash would have come a long time ago.
But also, Kim, you and I make more money in a crash.
We do, because we're not in the stock market.
Yeah, that's why not. Well, even in real estate.
Yeah.
When it crashes, that's when you get rich.
And it depends. This is the other thing. In real estate, when it crashes, it depends on what kind of real estate you have.
Yes.
Okay, so if you're in commercial real estate today, office buildings, you're in trouble. But most people are just thinking about their private residence. When it crashes, their private residence goes down in value, and they think their house is an asset, and it's going to go up in value. And oh my God, I'm worth this much money. But no, you're not, because you're not selling your house. And if you sold it today, where are you going to go? Everything is.
This is the worst thing, is that I won't mention the people's names, but they're jumping in because they think prices are going up.
Yes.
And every time you're jumping in when prices are rising this fast, you're going to get screwed.
Yeah.
And I can't say anything because it's a friend of ours. Well, I got 3 kids, I've got to have a house. And, prices keep going up, and they got sucked in.
They're panicked, yeah.
They're sucked in because we're in a bubble. Yeah. And when this next crash comes, they've already bought the house, unfortunately. I couldn't talk them out of it. But they're going to be stuck with what's called an alligator. It's going to be worth a lot less than what they owe on it. And it happens all the time, and that's when people like Kim and I come in, and we relieve them of their misery. And that's real investing. So crashes are great times if you can recognize that we're at the top of a market. So for all of you right now who think, who's right, Harry or myself? No, we're both right. It's going to crash. Question, what are you going to do about it, right?
How did she become the Treasury Secretary after the Fed Chairman? How did this happen? She's never done anything ever in history. An academic researcher. How? This is insanity.
Yep. So
Jerome, I like Jerome better. At least I think he had a part-time job at one time. Never. None of these guys.
So isn't the government going to try and step in on this blockchain and try to put controls in and take it over?
That's the point. It's bottoms up. You cannot squash this. That's what I love about it. I've always been a champion of bottoms-up technology. I mean, the information revolution from the beginning on the internet. How can you squash anything when anybody can learn anything? And again, my research, from 3 people to a half a person. Okay, so it gets harder and harder to squash. The truth about history is farther you go back, fewer people controlled all the wealth, and everybody else was a peasant, okay? Well, it's become more and more, middle class. That was a big step up. Middle class, you still can't. Well, what are you going to do as middle class? Take a vacation to Florida once in your lifetime? It's not that great. This is about making more and more people entrepreneurial, knowledge professionals, access to information, and be able to work with other people in a way that just would have never been imagined. So again, personal computers, internet 1.0, and now blockchain digitizes all of finance and money. Money is worth more than information. Would you agree?
Well, so go ahead and
2.0 and 1.0.
So Harry, one more thing is that when I look at what Biden is doing and all this stuff, I was talking to my accountant last night, and he's looking at the new tax changes coming up. He thinks, or his belief is, they want to shut down small entrepreneurs because they threaten them.
I know, and that's not good policy. I agree with you on that. I've been saying we're in a democratic era because once the economy slowed down after 2007, because remember, we've been living off of free money since. The economy really peaked in real terms in 2007, as my indicator said, 20, 30 years before it happened, okay? So they're printing all this money and stuff. So all these efforts, I mean, the Democrats were naturally to come in and help people who were falling behind and stuff. But the truth is the only way you grow long term is to encourage entrepreneurs and entrepreneurial investment. I'm known for demographics. You know, my favorite chart is the S curve. Something starts at 0.1%, a visionary, to the 1%, the entrepreneurs that first jump on that and do something with it. And then 10% when it goes mainstream, then it goes 10 to 90 in the same time. It took all that time to prove a niche market. Innovation and technologies and new businesses is the key driver, and demographics, when new generations come along spend, is number two. It's still big, but the technology and innovation cycles are even bigger. So the demographics are slowing around the world, but the innovation can still rise.
And then the thing I like about this new generation, millennials and all that, they're tech savvy, but they're also more aware of the Fed than we ever were, our generation.